AML in crypto is a bit of an anachronism because I'm not sure if anyone really knows what they're doing.
Hi everyone, welcome back to our channel, and today we have a guest who's actually my personal friend. His name is Soroush Kafiabadi, and he is an expert in AML, and he works in a very famous investigative company doing AML researches and investigations called Kroll. Soroush, welcome, and please introduce yourself in a more proper way, because obviously I'm not sure I know even 1/10 of what you're doing.
Nice to see you again, Tony, and thanks for the kind words. Yes, I do kind of dabble in a few things. My core expertise is what we call corporate governance, which is kind of systems and controls, and oversight by management. Secondly, it's financial crime, money laundering issues, and finally, what we call conduct issues. So it's a broad portfolio, but one of the core areas that we work on is financial crime matters, and we sort of, depending on the circumstances, we either give advice to firms on how to deal with the issues that they've had in the past or to avoid future problems, sometimes acting on behalf of the various regulators to go in and look at firms to see what issues they have. So it is more of a practitioner's view rather than an academic's view on where problems are and what they can do to fix it, or to potentially avoid getting a heavy fine or a sanction from the regulators, or even being shut down with enforcement issues. I had
just a previous conversation with a professional who is more like an MLRO type of a AML professional. So what you're doing is more like let's say investigative type of work. So right? Am I right saying that, or?
We do a bit of both. So sometimes depending on what we've been tasked to do, some parts of it is investigative. To, for example, see where the problems were which led to the issue, and that could involve doing a wholesale review of on an investigative basis what happened. But a lot of it ties back to what were the rules, the regulations, the requirements, and what was the firm doing to adhere to those, or where the shortcomings were.
Tell me more about, let's say, the most typical problems that most of your clients actually are facing, like in a practical sense. What would be the first thing that you would recommend everyone, our audience, for example, who can be compliance professionals, that you would look at in the first place?
Okay, so if I had to give two bits of general advice is, and one of the things that unfortunately often seems to be misunderstood is what is actually the reason that compliance teams or financial crime experts are doing. There's a buzz phrase or three words: risk-based approach, RBA. Right. Now everyone knows that that's what should be done, but very few people actually kind of step back and think, what does this mean in practice? There's often a lot of focus on making sure, for example, you've got the copy of the passport and the utility bill, and it's in date and it's been certified with the correct wording. But not often do people step back and say, why am I actually getting this? Am I just obtaining paper for the sake of obtaining paper? Or does it serve a purpose? If it serves a purpose, what is that purpose? And in which case, is this actually meeting that requirement? So the idea that compliance is not a tick box exercise is something that unfortunately is quite often lost on a lot of people who actually supposedly are experts in compliance, or who do a typical day-to-day job in compliance. The second very broad piece I would comment on, we can explore any of these in due course, is that it is also meant to be dependent on, for example, again, the phrase is size, scale, and complexity of business. Much of what I deal with is kind of that medium to large size of businesses. And at that level, one of the key focuses is often what is often referred to as 3 lines of defense. This is a well-known practice nowadays of how you should model your framework. First line of defense is your front office, your people who deal with the customers. They need to be kind of aware that they are responsible not just for generating business, but also to ensuring that that's the right type of business and conducting that first level of due diligence on their customers. Then you've got the second line, your compliance function, who does testing and ensures that everything is running smoothly, from your team doing what they're supposed to be doing, to the testing that they're doing, whether it is actually meeting the requirements, and kind of making sure everything is actually being looked at and looked at correctly. And then you've got your third line, which is your internal audit function, or your external internal audit, or however you structure it depending on how big you are and what capabilities you have and what your requirements are. Again, because we do with a lot of different pieces, it does depend on which specific business, which area, in which jurisdiction you're looking at. But understanding that three lines of defense model is often one of the most challenging pieces to try to explain to people why things go wrong.
Like many of our colleagues, for example, they think that, let's say, there are tight jurisdictions, there are less tight jurisdictions, and obviously, let's say, for example, Forex companies that usually obtain licenses somewhere, I don't know, Labuan in Malaysia, etc., and so they have some principal place of business, also not in the UK, but let's say in Cyprus or Malta. Some people would say it's just because they try to avoid strict AML compliance rules. Is that a valid argument against them?
Now, what you're talking about is what is now in kind of terminology we often refer to as international finance centers. The terminology is more commonly referred to as offshore jurisdictions. Right. But international finance center, offshore, depending on which side of the branding you're falling down on is how you would refer to it. Now, I'm joining you from sunny Gibraltar today, which is an international finance center, and historically, you're probably right. There were two main reasons for going to offshore jurisdictions: secrecy, tax. Unfortunately, that is no longer the case. With the tightening of the various regulatory regimes which has been imposed on these jurisdictions, examples of FATCA and CRS being kind of the most prominent pieces, it has meant that there has been very little scope for that secrecy to push illicit money. Mm-hmm. By contrast, and this is where sometimes it becomes quite funny, that America, for example, loves to push these rules and regulations on everyone else. But they have been less keen on enforcing those same rules on themselves. So today, if you wanted to be hiding something, sort of using secrecy laws, it is not the same as it used to be in the good old days where you could actually hide. But now probably the easiest place to do it is actually the US. Various specific trust structures in the likes of Delaware, which has been very common in the past, or South Dakota is the more common one now. And then if you look at it as kind of from state to state, it's different. What is it looking like in Maine? I have no idea. Unless I look at it in very, very close detail, I wouldn't be able to tell you whether Maine is a good jurisdiction to be able to hide or not. Today, because of the intense scrutiny that these offshore jurisdictions get, it is actually becoming more difficult to do something illicit here. Whereas, because when you go to the US, you're automatically deemed to be, for example, a low-risk jurisdiction, you manage to sail under the radar a lot easier. Or fly under the radar, not to mix my metaphors.
Just a small intermission here. We are talking about AML compliance from the expert perspective. But is there something that Sumsub can offer? Soroush just mentioned that the regulations are so much different from one country to another, and this means that there is no one-size-fits-all KYC product. For a global scalability, you have to have a customizable platform. And with Sumsub, you can actually build a verification flow that will be specifically tailored for your jurisdiction, for your audience, and for your industry, without involvement of any coders. If you have any specific questions regarding the jurisdiction that you are not familiar with, you can refer to the checklists on each jurisdiction that we have on our website. This is a completely free information. We have dozens of these checklists. If you have any complex question, you can refer to our legal team to me specifically through our website. For more information, please follow the link below. And otherwise, let's get back to the interview.
Still, if we look at Seychelles, for example, or Marshall Islands, they still are very secretive. But what you're telling about the U.S. is very important. Obviously, this came up with the recent Pandora Papers disclosure that they have, like, seriously an industry, a whole industry of secretive ways to hide things. Also in this direction, let's say Transparency International quite recently have named two groups of countries that should be very much addressed in terms of their problems related to anti-money laundering procedures. And one group was called Enablers of Money Laundering, and they included the US, the UK, Australia, and I'm not sure about other jurisdictions, but also very nice jurisdictions, very reputable jurisdictions. At the same time, let's say if we look at the grey list that is published usually by FATF, we will not find these countries there. We will find some other countries, such as Yemen, or let's say, well, they have Turkey there. How can you comment that? Like, what is it about? It's just an unfair world, or what is it?
So I'll split the question in two. First, part of it referencing Marshall Islands and the like, actually goes back to the earlier piece. You're absolutely right. Panama, Marshall Islands, they don't have the best of reputations. Seychelles, the same. And if you look at the number of entities that have been set up in these jurisdictions in the past, if you look even 5 years ago, 10 years ago, if you want to go really extreme, but 5 years ago, if you look at the number of incorporations in these jurisdictions versus the number of incorporations today, you will see how much it has dipped. And even today, this is where you do get a divergence when it comes to offshore jurisdictions. You've got the likes of, for example, Jersey, Guernsey. I know I'm slightly biased as a Brit, but Gibraltar, who have tried to move towards the legitimate side of the offshore business. And the same with, for example, Malta is doing a lot and sometimes going above and beyond to be able to push itself into that side, having previously found itself in a bit of trouble. And then you have now ended up with some of these other jurisdictions, the smaller island nations, that used to survive on this and are now being almost looked at with a very, very close scrutiny. So if today you see we do file testing. If I ever see a number of Seychelles entities, my automatic pick is, that's where the risk is, that's the one I want to look at, because if you've got a client that opened an account with you 10 years ago and is based in the Seychelles, and I cannot see any other legitimate link to the Seychelles in why they're there and how they're there, that's a kind of a massive red flag. I want to look at this to see if you've got a problem. On the second part of it, the enablers are there for a reason. Without the enablers, money laundering can't happen. But they're also there because they are legitimate jurisdictions. So you've got the three stages of money laundering that everyone talks about. You've got placement, layering, and integration. Now, you layer to be able to hide it, but ultimately, you need to integrate it. So your final layering piece and your integration has to be to a legitimate jurisdiction. How do you go to a legitimate jurisdiction? You go to UK, you go to US, you go to Australia. Places that people automatically assume is fine. Unless you use one of these jurisdictions as part of your layering, you won't be able to appear clean. If I layer through, I don't know, Marshall Islands, I feel terrible for picking on Marshall Islands, Vanuatu, Cayman historically, Malta, so many others, you still don't look clean. At some point, you have to go to UK, you have to go to US to be able to get into that my money's clean appearance. And yes, these jurisdictions perhaps could have done a lot more to be able to combat this. Now, why they haven't done it is it's a question that needs kind of many more hours, and books have been written about this. Some of it is political will, some of it is necessity, some of it is people talk about it almost as nature of business. When some of the leaks from Panama Papers through Paradise Papers and the rest have come out, people often get the sensationalized, oh my God, look at what's happening. Well, no, a lot of these are I'm sorry to say, legitimate tax structures. Tax avoidance is legitimate. Tax evasion is illegal. Now, why is tax avoidance a thing? Again, we can easily understand why the wealthy would want to pay less tax. So using these jurisdictions is absolutely fine to avoid tax. Might not be moral, and that's where the sensationalist journalism comes in. But it's certainly not illegal. My world is when it crosses that threshold of avoidance into evasion. And that's when it becomes money laundering, and that's where it becomes problematic. So, could these jurisdictions have done more? Absolutely. Is it going to happen? Certainly it's moving in that direction.
How do people launder money these days? For example, some of my friends would probably say how people launder money. They launder money through cryptocurrencies, that's it. They just put some money into cryptocurrency in one place and then take out in another place. But obviously this is not just that is happening. What are these secret, let's say, caravans of dirty money? How they look like?
So I was going to say, so first off, bear in mind that I need to caveat this by saying I'm not giving advice to anyone on how to launder money with whatever I'm going to say next.
We are not doing this.
Especially given the number of times that I've been asked about kind of whether this would be legal or illegal, and I've had to say, well, first off, I can't comment on anything like that, but this is one of the considerations you need to make sure that you don't cross that threshold, otherwise you're in trouble. Right. But I would probably say that you got the two ends of the scale. And I'll only talk about the two extreme ends. You got the small time kind of players who are trying to move what I would say an inconsequential sum of money when it comes to the global financial transactions. These are, let's say, someone who wants to move, I don't know, a couple of £100,000, dollars, or maybe even tens or so from one place to another. Or, and let's not forget, money laundering is any illegal activity. So kind of any kind of tax evasion or anything like that would technically constitute the same piece. Those people have got very unsophisticated means of doing it, and to be quite honest, based on personal experience, unless they do something silly or unless they've got very, very hawkish people looking at it, it's not terribly complicated to do it. So it happens probably. It's when it becomes massive scale that it becomes problematic. So on the small end, I mean, the easiest piece is you use middlemen. You give money, let's say you want to move money from X jurisdiction to Y jurisdiction without a trace. You've got a middleman. You give them money in X jurisdiction, they transfer you money in Y jurisdiction. Now, the only complexity is this is kind of a model that has been applied since money and in electronic transactions have been a thing, and even before that. It's the large scale that typically concerns me and the clients that I typically advise. And those have become incredibly sophisticated. Sometimes these are state actors, sometimes they are large corporates, and that's where the extreme end of the financial investigation. So when you've got a problem, you need to then investigate, and you need to investigate thoroughly. And there are some steps that these people take which makes it very difficult. First, jurisdiction hopping. That's the easiest piece that they do. You set up structures in different jurisdictions, you set up accounts in different jurisdictions. Once you have moved the money from, let's say, to use a crude example, let's say illicit money is coming out of, I don't know, pick a jurisdiction. Russia's in the news, so let's use Russia. Illicit money comes out of Russia. You move that to Kazakhstan. From there, you've made a small jump. From there, you move it to UAE. From UAE, you move it to Singapore. From Singapore, you move it to the UK. Or even via one of the offshore jurisdictions. By doing that, whether it is with entities set up in these jurisdictions or bank accounts set up in these jurisdictions, you can even have your entities in 2 or 3 different places. For example, UK is a fantastic place to set up an entity. It's easy, it's quick, and no one ever looks at it. And it also looks legitimate because you've got a UK company. That's why a lot of people use UK companies or Scottish LLPs or sometimes some US entities. One of the cases that I had to work on, we were advising a firm, a bank, that had run into some troubles in the US and in the UK. So we were helping them, and one specific piece that came across my desk was a structure that was set up for a fund launch. There were a handful of kind of initial investors, big shots, before they would go into trying to raise funds more widely. And I just looked at it and I said, we're missing something here. In the UK, we typically say, for a high-risk customer, apply 10% threshold for UBI identification. I know this is 9.9%, but clearly they're going to 9.9% because they know the rules. They don't want to cross that threshold of 10%. I know it's not a requirement, but I would say you need to understand, as a minimum, don't verify it necessarily unless you see something, but identify who's behind this. So they go back, they bring back information from a lawyer, saying, oh, the person who sits behind this, and the specific name they gave us was the Red Cross Geneva is a beneficiary of a trust that holds this. And the trust was some funky name as well. And I just said, okay, if it's the Red Cross, they're not going to sit behind a funky named trust. No. I want to see the documentation. They provided the documentation, nothing to do with the Red Cross. It was an individual who had set it up, and again, this is why you have to get that risk-based approach. And he had changed his name based on the spelling from the kind of I don't remember what was the original language, but from, let's say, German to English, he dropped a couple of letters one way or another, so if you just search for it automatically, it wouldn't come up. But because I could see where the links are, and I could see the beneficiaries have a slightly different surname to the settlor, but clearly they were linked, parent, child, I started doing a couple of Google searches, and within 2 minutes, I found out that the guy was on the red notice list of Interpol. He'd been hunted for 10 years with no one knowing where he is, and I was sitting there with a copy of his passport and a copy of his utility bill just because I thought this doesn't make sense. So if I can leave one message is, always see, does it make sense? So you got your entities, you got your accounts, and you just set them up in different jurisdictions. When your financial flow happens through the different jurisdictions, which is the key bit that they use, you now have a very difficult task of tracing this, because you need to get the permission of these other jurisdictions to be able to do it. One perfect example used to be Swiss. The second money hit a Swiss account, you could not get information out of Switzerland because of Swiss banking secrecy laws. There has been a bit of a shift on this, and I mean, it does again depend on the political power that the various jurisdictions yield. US, for example, when they do investigate these things, can get information out of Switzerland. But if you are investigating this out of a kind of a lesser influential country, you might not be able to ever get information out of Switzerland. So that flow makes it very difficult to actually trace and track exactly what was the source and what was the end. That's the first problem. The second problem they use is one of the most sophisticated pieces that I have personally witnessed is using corporations. You use fake corporations, so you set up something which sounds like a very large, let's say a shipping business or a large manufacturer of steel. Construction is kind of industry is a fantastic piece to use because significant sums of money move through industry. And no one really understands that, I don't know, if you put down alloy, hydroxy, blah, 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 some complicated terminology. Yeah. You can dig up quite easily on Google and you say, I don't know, we're transporting 7,000 units of this and each unit costs $10,000. You can even make that entirely legitimate and no one will bat an eyelid when they look at that invoice. So they use corporations, they set up corporations in similar jurisdictions or in other jurisdictions using similar names to legitimate corporations, and then they just fake invoices. Now you've just created a paper trail that allows transaction with that entity and make it look like a very reasonable transaction.
When I talked to Graham Barrow about basically what the MLRO does and does not. We were just discussing the banks and how they sometimes are disclosed to be engaged in money laundering. He just said plainly that all banks are engaged in money laundering. Some of them are not caught at the moment, but all of them are engaged in some way. And then if it's a big scandal, then they hire an external professional to teach them how to do money laundering, to do anti-money laundering procedures, and then they again doing the business, and at a certain moment again get engaged in the same thing. So it looks like how to say that? It looks like a very let's say senseless sports game.
It's a game of cat and mouse. So first off, I completely agree with Graham. If there might be one out there somewhere that has not touched any aspect of money laundering, but it is highly unlikely. And quite honestly, I wouldn't have a job and he wouldn't have a job if this wasn't happening.
Yes, of course.
So
yeah.
It's a game of cat and mouse, and you constantly need to evolve to be able to catch it. You do the right thing for however many years, and unless you evolve, you won't be able to see it the next time. So that's why people like us exist to make sure that we can advise financial institutions on where are the gaps that are stopping you from identifying this. And to be quite honest, with the best will in the world, we're in the business of risk mitigation. You're trying to minimize the likelihood.
Still, there are industries that, let's say, okay, we cannot abolish banks, right? Banks are used in some cases for money laundering, but still you cannot abolish banks. But there are industries that have more risk, industries that have less risk. The industries that have more risk, such as cryptocurrency, for example. What would you consider, let's say, absolutely hopeless industries that have so much risk that you would not consider them just being a part of this game of cat and mouse, but being like inherently criminal and inherently bad in terms of these characteristics?
I don't think that exists. I come from a world of everyone needs a lawyer, even criminals need lawyers, and we're in the business of risk-based approach. You should be able to deal business with anyone and everyone that is legal. So if the business is legal, even if 90% of it is dirty, there has to be 10% that is clean. So you just have to have the extra controls to be able to identify the 90% dirty and deal with the 10% clean. Crypto has got a bad rap. Crypto world, I don't claim to be the world's leading expert on crypto and financial crime controls and AML on crypto. But for my liking, crypto is split into kind of two worlds, or will be moving in that direction more and more. The entirely legitimate side of crypto, your stable coins, and the slightly murkier waters with the use of blenders and other similar tools to kind of hide and to be able
Mixers.
To allow for the dirty side of crypto. On the one hand, you've got regulation being applied. Actually, the reason that I have to know about a lot of these things is because Gibraltar is forming itself as one of the hubs for crypto exchanges. It's quite a few. There's like 13 or 14 of the bigger ones set up here. It's a regulated framework. Some of them are even talking about kind of various listings in very reputable places. So there's no way of moving away from crypto. Crypto's here to stay. But you got that half of it. And then you got the slightly murkier half that is actively trying to avoid being able to be found out, to try to allow for some of the more dubious things to go on. So, is crypto bad? No. Is some of crypto bad? Absolutely. Is some of crypto is being currently and actively and heavily used for money laundering? Yeah, definitely. But not all of it. Not every crypto exchange is dirty. Sorry, not every crypto exchange is that dirty. There will still be something happening, but some of them are doing that required standard of mitigation. to adhere to the regulatory standards, and that's how they're trying to make themselves successful.
So if you just by a chance become a head of financial regulator in FCA or in Gibraltar, for example, what would be your first decision?
Fire myself, because I think I don't do that. What would be my first decision? Wow, that's a tough question. Okay, I'll give you my answer in terms of. It's going to be tough. Yes, the FCA is doing a fantastic job, as is the GFSC. I actually really have a lot of respect for what they do. What would the head of the jurisdiction, first thing they would do?
So you would not change anything?
Impossible to say don't change anything, because if you don't change, again, it's a cat and mouse game. If you don't change, you're dead in the water. So you always have to change. Okay, if I was the head of any jurisdiction, financial regulatory role, and if we're talking about a focus on financial crime, I would destigmatize crypto. I would make it a lot clearer in terms of what is good, what is bad, and move this whole notion that all crypto's bad or all crypto's criminal money laundering out of that domain. And I would try to have a sensible framework of almost a global regime for the crypto world. It's not an easy task, and I'm not sure if I would ever be able to pull it off, but this is where the one instance that I can actually think of that Gibraltar's ahead of the FCA. They have done a lot more in terms of their own understanding and knowledge of the crypto world and what should be done and how it should be done right.
You know, I would stop here, but now I have a follow-up question, which is, I'm sorry about that, but seriously, you started this, because like the difference between crypto, like the main difference between crypto, to my mind, the main difference between crypto and fiat systems is that fiat system is centralized. Like it's centralized by the idea, and crypto is partially centralized, partially decentralized, and people can hold their monies, let's say, in their personal wallets, etc., etc. So, do you believe that it will be possible to preserve the decentralized part of the crypto in the future?
Okay, again, I will have to be very clear that I know financial crime, and I know compliance, and I know regulation. I don't claim to be the tech guru who can talk you through every intricacy of the blockchain. But again, this is a myth that just because it's decentralized, it is going to be helping you to hide it. Decentralized is still on the ledger. It still can be traced, it still can be identified if you're doing something dubious. So, I am, based on my knowledge of the history of the financial regulation and financial arrangements globally, I don't have a problem with the decentralized approach. I think it actually makes perfect sense.
This was Soroush Kafiabadi with us, and thank you very much, Soroush. I think it was a fantastic talk, and thanks.
No, thank you for everything, guys. Appreciate it. Best of luck with the editing. I can imagine it's going to be an absolute pain.
Thank you.
If you can make me look prettier, that will certainly be appreciated.
You are so pretty. You are absolutely. You are the
just
superstar.
swap my head and my body with Chris Hemsworth, and it'll be fantastic.
Yes.